Who do you ask for property investment advice? With so many mixed messages, so many vested interests, who can you really trust? And in today's property market, there are actually very few advisors who've got the perspective of having lived through and successfully invested through a number of property cycles and who understand how to take advantage of the current stage of the cycle where most haven't ever experienced these conditions before. Despite that, there's a new breed of so-called property experts emerging. So in today's podcast, I'm going to explain to you that you shouldn't take advice from somebody who you wouldn't trade shoes with. So what's the threshold for being able to call yourself an expert? Usually experts have got years of experience in their chosen profession. They're at the top of their industry and they shape the path of progress. And yet there's no shortage of so-called property experts, no shortage of buyer's agents whose only real experience seems to have been they've done a short course and they really love property. Now, the rise of so-called advisors coincided with the practice of personal branding on social media. While social media has undoubtedly created a fantastic opportunity for real experts to connect and share their knowledge, it's also opened the floodgates for a tsunami of self-titled property experts looking to flog their books, their consulting sessions, their training programs, or their online courses. So in today's show, Mark Creedon and I are going to share with you some advice from Warren Buffett. As I said, don't take advice from somebody who you wouldn't trade shoes with, and I bet you'd love to be in his position. So welcome to today's show.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment, and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect, and pass on your wealth through strategic property and wealth advice. Now, here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
There seem so many mixed messages on what's ahead. What's ahead for our economy, for inflation, for interest rates? How's it going to affect your property markets? How's it going to affect your business or your professional practice? Now, clearly there's no shortage of opinions on what we should be doing with our lives, be it in savings, in spending, investing, and running our business. However, over the years, I've learned a lesson that I return to and that I recommend to you to bear in mind. Regardless of your age or your experience, as you continue to navigate your life and try and figure out in which direction you should be going, how to do things differently, whether it's investing or running your business, I think you should always keep the following quote in mind. Don't take advice from somebody who you wouldn't trade shoes with. Let me say that again because I think it's that important. Don't take advice from somebody who you wouldn't trade shoes with. Who's somebody we could all probably agree is the person that we might consider taking advice from? Well, how about that most successful investor of all times, multi-billionaire Warren Buffett? So to discuss some of Warren Buffett's thoughts and see what we can learn from them, I'm looking forward to my regular chat with Mark Creedon, founder and CEO of Metropole's Business Accelerator Mastermind, who happens to be the business coach to some of Australia's most successful business people and entrepreneurs. Hi, Mark.
Hello, Michael.
Now, look, I don't know about you, Mark, but if Warren Buffett was sitting in front of you, me dishing out advice, I'd be listening to him intently, wouldn't you?
I would absolutely love to have that opportunity, Michael.
Yeah, I don't think we're going to get that opportunity to sit at the dinner table with him anytime soon. So look, what I've done was I compiled a list of some of his classic pieces of advice. So I think we should just have a look at them, talk through them, and see what they mean to you and me so that our listeners can see how they can apply to their own situation. Now, they may not all apply to them, but I bet you we're going to learn something from it. So shall we give it a go?
Yes, let's run it.
Now, there's no particular order in which I've found these on the internet, but some of my favourite tips from Warren Buffett are be fearful when others are greedy and greedy when others are fearful. I think that's probably one of his most often quoted quotes.
Oh, I think it is. It's actually very apt given where we're at the moment and all of the fear that's being spread in the media at the moment. And I think it's a great quote to look at right now, Michael.
Well, I guess what it's suggesting is that most people are wrong. Business cycles, property cycles, the economic cycles driven by fear and greed. And we tend to be most confident close to the boom, close to the peak of the cycle, and we tend to be most despondent near the bottom of the cycle, when in fact we should be the most confident because there's very little downside. I remember reading many years ago that the wise King Solomon had inscribed in his ring, "This too shall pass." So he was never too overconfident in the good times or too despondent in the difficult times. But Mark, it's actually hard to take action when the media is full of negative messages.
Well, but what we know, of course, is that good news doesn't sell in the media, unfortunately. Although, Michael, I do have an app I think I've shared with you called the Good News app on my phone. I like to have a look at that from time to time. But it's very difficult. Good news doesn't sell media. Media thrives on bad news. I was just having a chat with one of our clients earlier about that, and they were saying that even in the really good times, they were never arrogant in their business. They were never arrogant. They were always had one eye on the fact that the good times would pass and that more challenging times would come. But similarly, whilst they were never arrogant in the really good times, they're never lazy in the really challenging times, and that's when they really double down on their efforts. So I think that fits in nicely with Warren Buffett's quote.
Well, that's interesting. So in business, and a lot of businesses are having a challenging time, and those in the business of property investment, similarly at the moment, there's the three paths that I know you deal with in our clients at Business Accelerator Mastermind about the three futures. So we know that somewhere in the future, so you're probably listening to this in October 2022, so in 12 months' time, one thing we can guarantee is we're going to be in October 2023. Sometime between now and then, and I think it'll probably be in the first half, maybe even the first quarter of next year, fear is going to disappear and greed is going to overtake fear. At the moment, fear is overtaking greed. And there's three ways I know that we're finding not only investors but also business people are responding at the moment, and only one's a successful way of responding, Mark.
Yeah, that's right. They've got to decide that we talk about the three possible futures of getting on the green line and making sure that they're focusing on the future opportunities, not sitting and stagnating, and certainly not falling into decline, Michael.
Well, falling into decline is happening with, I've just recently read a lot of property investors are selling up. They're getting annoyed and frustrated by the legislative changes, the land tax changes in Queensland, the changes to the Residential Tenancies Act, which makes them feel they've got less control. Unfortunately, they're giving up. The trouble is the government's not going to look after them, and in general, their super isn't going to be enough. So rather than giving up, I know others are just sitting there, just biding their time to see what happens. But there are a small group of clients who are taking action at the moment, setting themselves up, getting their structures right, getting their finance right to take advantage of the window of opportunity that's happening in the property market. But Mark, I know that we're also finding a similar three-way of doing things with business people.
Yeah, very much so. I mean, the reality is there's always going to be legislation. The governments are always going to meddle in our business to some degree, aren't they? And that those legislative changes are going to come and go. What we're seeing with the successful business people that we work with, Michael, is they're doing exactly that. They're getting onto that growth line. They're planning for the future. They're not battening down the hatches. They're not falling into decline. They're not giving up. They are actually doubling down on their efforts. In fact, knowing that if they do that now, when this tide does turn, as it most assuredly will, they'll be extremely well positioned to be able to take advantage of what may come.
Now, the one way to do that is actually surround yourself with other smart, like-minded people. It's a little bit hard at the moment to do it on your own.
Oh, it's very difficult, if not impossible, to do it on your own. It's easier to do it by surrounding yourself with like-minded people, but it's also a lot more fun. I mean, at the end of the day, we've got to enjoy what we're doing as well. And if you can surround yourself with positive people that talk you up, that boost you along, and just make those tougher times that little bit more palatable, then I think that's exactly what you should be doing.
Now, I know just before we had this, we were doing our business. You're my business coach, and we're business partners in Business Accelerator Mastermind. And we were talking about some clients who are very successful in a business that has had challenges over the last couple of years. And what they said was one of the great things they're getting out of being part of Business Accelerator Mastermind is not just you and your coaching and the little bit of involvement I have, but actually the community.
Yeah, they love the fact that they no longer feel alone and isolated. And one of the big things that we see, Michael, is people walk away from group sessions that we have, and they walk away and they go, wow, I just feel so much better just knowing I'm not the only one. I'm not the only one that has that problem, or the only one that's suffering from that particular issue.
Sure. Okay, let's go to Warren Buffett's next quote. And he said, "A public opinion poll is no substitution for thought." I guess what he's saying is, don't listen to everyone's ranting about stuff, especially don't take it for gospel.
Well, what is it we say that, around the barbecue every Saturday in Australia, there's always, hundreds, if not thousands of property experts or business experts, or lately I've been amazed, during COVID, how many epidemiologists I ran into
health
around
experts.
the barbecue. It's quite amazing. So you're right. I mean, public opinion poll is just that. It's almost like a popularity poll, really, isn't it?
Well, everyone's got an opinion, but that doesn't mean they deserve or they've got the right to take advice. So let's go back to the first quote that I said before we even started. Don't take advice from somebody who you wouldn't trade shoes with. So just because they've got an opinion doesn't mean you should be paying attention to it. Okay, interestingly, Warren Buffett said, think in terms of income, not appreciation. Now, we know that while he owns properties, basically he owns businesses, not just shares in businesses, but businesses. And in property investment, cash flow is critical. It keeps you in the game. But in my mind, in property, capital growth is what gets you out of the rat race. There was recently a study done by Pippa showing over the last decade, capital growth, the CPI increased by 25%, compound over the last decade. Capital growth was much, much higher than that. But rental income of rents, if you were just investing for cash flow, was only half of that. So with property investment, yes, think of income, but you also really should be considering appreciation, which gets you out of the rat race.
100%. It's interesting, Michael, because one of the things, as you know, with most of our business clients, what we do is work with them to generate the income out of their business so that they can use that income for appreciation in those in their property assets. So it's a nice sort of a juxtaposition in lots of ways, isn't it?
Well, if you look at the BRW, it actually used to be called BRW. It shows my age, the AFR Rich 200 list. You'll find most of the people have made their money in property, and those who haven't have actually made it in business and then put their money from their business in property. So a good thought from Warren Buffett. Now, this is a slightly longer one, and he says, you ought to be able to explain why you're taking that job that you're taking, why you're making the investment you're making, or whatever it may be. And if you can't stand applying pencil to paper, you better think about it some more. If you can't write an intelligent answer to those questions, in other words, why you're doing what you're doing, he says, don't do it.
Well, do you know what? It's a very long quote, but it's a very accurate one. And one of the things that certainly we work on, and I know you do with property investment as well, is to understand what your why is. If you don't know what your why is, how do you get up and go every day? How do you battle through all the various challenges? I mean, how do you move from from bullish times to more challenging times if you don't have a very strong why? So I couldn't agree more. I think you have to know exactly why it is you're doing what you're doing and why you're moving forward. And that's what actually gives you the motivation and the momentum, Michael.
Well, when we put a strategic plan together for property investors, the first thing we start with is understanding where you want to go, because there are a number of different ways of getting there. And you may be in a hurry to get there fast, or you may be in a wanting to do it more slowly and stop off scenically along the way. It's just like if you looked in Google Maps to see where you were heading. I could get to Melbourne and Sydney quickly down the Hume Highway, or I could go slowly taking the various routes along the coastal way. So you may want to stop off and have a baby, or you may want to take some time off work and go overseas. So you've got to have a why, but you've also got to have a plan of where you're getting in, an agenda, because there's more than one way to get there. But if you don't have a plan, you're not going to get there.
Well, what's the old saying? A fail to plan is a plan to fail.
Sure. The next quote, and I know we both agree with it, is use partnerships to fill the gaps in your expertise, Mark.
Yeah, it's interesting how many people sort of forget this one and try and do everything themselves or try and be their own experts. I mean, it's that smartest person in the room. What is it, Michael, you say? If you're the smartest person on your team, you're on the wrong team. That's
right. So I think you've got to be willing to admit your weaknesses. That's not easy for people to do sometimes, and bring in team members to fill those. So you can't be an expert at everything, and you shouldn't try to be. I know within our team at Metropole, there's over 80 employees, and they all work in different ways. So some are very analytical people, some are big picture people, some understand property, some understand wealth, some understand business, and together we can, well, I guess on our own, maybe you can run faster for a short time, but together we can run further.
Well, it's interesting. You and I were just talking before, and there are people that you and I work with within the various businesses who are more analytical, more detailed than you and I are. But if you and I were just in charge of the show and we didn't actually take any advice from them, we'd probably steam on, at a great rate of knots, but we'd miss lots of things along the way, wouldn't we? We'd miss lots of the detail.
Now, we keep talking about you and I. So for those who are not familiar, if you're a new listener to this, and thank you, welcome. We tend to talk in general about property, success and money, but once or twice a month, Mark and I get together about these bigger picture concepts because Mark's not just my business coach. I've got to be blunt. He's also my business partner in a number of parts of the Metropole group of companies. And in many ways, you're my right-hand man, so you're over all of it. And I think you're a better business coach because you're an investor, and you're a better property investor because you're a business coach.
It's funny how that works, isn't it?
Yes, it is. So therefore, I guess a lot of business people and professionals who use you and Metropole Business Accelerator Mastermind get the benefit that you actually understand the other side of things as well. Next quote from Warren Buffett: minimize your mistakes and learn from those you make. Well, we've spoken about this before, that we all have failures and you shouldn't stop them from taking the next steps forward, but you should minimize them.
Well, you should minimize them and learn from them. Far be it for me to add something to the great Warren Buffett, but I think the only thing I would tweak on that is to minimize your mistakes and learn from those you make, but also learn from the mistakes of others.
Exactly. I like that. And that's why it's actually impertinent to think that you can invest better than somebody who's been in the market for 5 decades like I have, or 4 decades like you have, or that you can run a business on your own when you have seen from multiple spheres the things people do right and the things that people do wrong. Why not learn? Because you can stand on the shoulders of your mentor and see much further.
Yeah, 100%.
Next quote from Warren Buffett: I really like my life. I've arranged my life so I can do what I want. Now, that's a great position to be in, Mark.
But do you know, unless you win the lottery or have some money on a very fast horse, or the likelihood that that's just going to happen to you is almost zero, Michael. So you've got to plan for that. It is the difference between just having a job and having choices in life, having passive income from investments, or having a business being able to deliver some passive income to you. But it's something you actually have to plan for and work on achieving.
Now, I keep harking back to business, but I think this is really important for professionals listening to this and people listening to this who are in their own business. And even if you're an employee, you're probably in the business of property investing, so please pay attention to this. Most people who think they've got a business, Mark, don't actually have a business. They've got a job. And so that's why they don't have the time freedom that Warren Buffett's got.
Yeah, they don't. It's often quite challenging when you talk to people about that. So I've got this great business. I go, you do have something great, but if you can't step out of your business for 6 weeks or more and there's more money in the bank when you come back than when you left, then what you really have is a job that's completely reliant upon you.
Sure. Well, I had built a substantial national business, but you've been my business coach for over 10 years, over 12 years now. I've lost track. And over those years, we have worked to allow me to have choices in life, and I do. I'm actually choosing to work, but I'm working on the things I enjoy working on. I've taken another holiday in a couple of weeks' time. We've just come back from a cruise. COVID now is over and making life a lot easier. But I've actually had to build a business and not just have a job. And that's not as easy. And I know that's one of the areas that you specialize in Business Accelerator Mastermind.
Yeah, it is helping people to build up that next layer of people around them so they can do that. But I think the really important thing, Michael, is that, yes, we can talk about being able to do the things you want, but that doesn't mean, it doesn't have to mean playing golf or lying on the beach or cruising around, because for you, whilst you're taking some holidays and you're spending time with the grandkids and those things you love to do, but part of it is the work that you do, you love to do as well.
Oh, and that's one of the really important things, because it helps you get through all the challenges of running a business and being in property too. Now, the next one from Warren Buffett is also my philosophy. He says, when you plan to buy, plan to hold. He's a long-term person, thinking long-term rather than speculating, buying and selling, trading.
Well, that's right. I mean, he's a big, huge idea of fan of the idea of holding rather than sort of short-term speculation. Michael, it always sort of makes me laugh when I think about this quote, because I can't imagine how many times people have said to you, "Oh, Michael, when's the when's the top of the market, or when's the bottom of the market?" I mean, trying to predict which way the markets will move in the short term is just exasperating and really an exercise in futility. So I guess that's why he takes that long term view of the market and feels comfortable doing so.
I think he said if you don't feel comfortable owning a stock for 10 years, you shouldn't own it for 10 minutes. And similarly for property, it really is a 10, 20-year time frame because just of the length of the cycles and the cost going in and out. Okay, the next quote from Warren Buffett is, the trick is when there's nothing to do, do nothing. And Mark, I know I've made more by saying no to perceived opportunities than yes to them.
Yeah, this is something that a mentor of mine taught me when I was in my early 20s, Michael, is that you can often be defined by what you say no to than what you say yes to. And it's something that you do in terms of opportunities. It's something that we do in terms of clients as well. I mean, there are people who would like to work with us that we say no to. And I think that if you can have that strength, that bravery, if you like to do that, sometimes just doing nothing is and seeing where the market is going or what's happening, and just to sort of sticking to your plan rather than constantly trying to get in and out of things and changing things as you go.
Now, it's funny, Mark, that you said we choose who we work with, and we like working with a range of people in the property area as well as in the business area, but our services don't suit everybody. And it's interesting that today we received a 1-star negative review on Google, and that disappointed me, and I know it disappointed Kate, and it's because it was somebody who saw us, paid for our fees, we started to put a plan together for them, and interestingly, we knew they just weren't prepared to listen. They had their preconceived ideas, and all they wanted for us to do was to confirm their preconceived ideas. So interestingly, we stopped working for them. We gave them their money back. We're not going to take money from people if it's not going to help. But part of it is putting a plan together, that roadmap to your future. And the problem is most property investors fail because they don't have a plan, and others fail because they have a wrong plan. And so I guess we are in the position where we're not going to just take clients on and tell them what they want to hear. It's our job, I think, to fix problems that they currently have, to prevent minefields. We know what's ahead, fix problems that could happen, and actually to help them outperform the market. But some people are just so stuck in their ideas, they're not prepared to. And so it's disappointing. And I guess, in fact, she contacted a number of people at Metropole and even me. So I actually took the time to have a chat with this lady. But again, she was just so set on where and how she wanted to invest. And we're not going to set people up for failure. So I'm sorry I got sidetracked, but I think it is important to understand the advisors you get advice from. Right back to the first quote that I said, don't take advice from somebody you wouldn't trade shoes with. So if they do give you advice because they've got a time-tested system and framework,
yep,
why would you think you know better?
We strike it. We strike it in property. We strike it in wealth. We strike it in business. And unfortunately, some people think that they can come along that in getting the advice, it's that they want to tell you the advice that they want you to give them. And that's not how you and I work. It's not how the Metropole Group works.
No, it's not. So the other thing is I often get questions on Property Update, and in the old days when I used to do seminars, people would come up and say, hey, what do you think about buying an investment property in so-and-so? And they tell you an area out in the sticks that you wouldn't buy in, and you know the reason they've asked. Because they've already bought it. They haven't come to ask advice beforehand. They've actually come along to get confirmation about it. So unfortunately, sometimes I can be blunt. You know that. And so I'd ask them, do you actually own a property there? Yes. So why are you asking me for advice? Do you really want to know what I think, or do you want me to say you made a good decision? Anyway. So
you're going to have to stop saying the old days, Michael, because every time you say the old days, I remember the things you're talking about. And I just feel feel older.
Next quote from Warren Buffett, the macro view is more important than the micro view. I think that's particularly relevant in today's time when you've actually got to look at the big picture.
I was talking to very successful clients just today, in fact, and they were talking about how they'd put some money back into their business. Now, if they were to look at the short term, because of a sort of a slow start to their particular season, if they were to look at the short term, they would have sold up and and moved on at the end of the last season. But they don't look at it that way. They look at it in big picture. Let's put some money into this. We know that we're going to come out of the other side of this, and they're going to set themselves up. And this is something they've been doing as a pattern for the last 20 years and very successfully.
Interestingly, I know who you're talking about, and they're in the seasonal business. And I know that they believe spring follows winter, and it has for 2,000 years. So they're putting their money on spring following winter and summer following spring. And it's really the same in the business cycle, and it's the same in the property cycle, isn't it?
Yes, it is, 100%.
Next quote, risk comes from not knowing what you're doing. In other words, the risk, people say to me, is property development risky? Well, it's not for me because we're currently involved in, I think it's close to 70 property developments. But if you said to me, is building a high-rise apartment tower risky? Yes, because I've never done that. I've built 3 4-story apartment buildings and 2 office buildings, but they're only 2-story high. So I know what I'm doing, but for Harry Triggerboff, that's not risky at all because he knows what he's doing. So I guess there's a lesson in there in becoming financially fluent.
I think you need to become financially fluent. And it's also a lesson about sort of swimming in your own lane to a degree as well. So knowing what it is that you do. So if you said to me, Mark, help me with my property investment business. Mark, help me with my consulting business. Not an issue. Mark, help me start up a restaurant. I'll leave that to Gordon Ramsay. I mean, that's I don't have that knowledge, so that's not an area I'm going to play in.
Hey, it keeps coming back to that first quote all the time, doesn't it? Don't take advice from somebody who you wouldn't trade shoes with.
Very true.
So as we go through Warren Buffett's quotes so that we're learning from him, and he has really given us some great lessons, is embrace the boring.
Now, you know what's interesting about this, Michael, is those very clients we were talking about today, we were talking about what they should be doing now because there's a bit of a lull in their market. Their season is starting late. And I said to them, I know it sounds boring, but now's the time to get back to basics. Very basic selling, cross-selling, upselling, suggestive selling, training the team, all the kind of boring stuff that isn't exciting. But we know that if they get that right now, when the season hits, then life will be exciting. So sometimes you actually have to embrace the boring part.
Sure. Well, in my mind, property investing should be boring so the rest of your life's exciting. For many things, whether it's business or investing, you really shouldn't be looking for the next exciting thing, the next hotspot. In fact, my property investing strategy is too simple for intelligent people. They look for ways of twisting it. Interestingly, Mark, I can't tell you how many times people have come to me and said, I've read your books, I've listened to your podcast, I've read your blogs, and I've tried it. It didn't work. You're wrong. And I said, actually, did you ask my advice? Did you ask my team's advice? No, I followed it. No, you didn't follow. What they do is they take half of it and they choose a little bit of this and a little bit of that, and then it doesn't work, and it's my fault. When, as I said, my system is too simple for most intelligent people who try and complicate things.
Yeah.
That's with regard to property. But you kept talking a few times. There's a few more quotes I really, really want to get through with you. But you mentioned a couple of times about clients. So for those who don't know, let's do a quick shameless plug to help sponsor the show and tell us what you do.
So Business Accelerator Mastermind is a business coaching program which is designed to help people who are already in existing service businesses, professional practices, who really, Michael, at this stage, they have more of a job than a business. And so the business is so reliant on them. What we do is get them to the point where the business relies 50% less on them, 50% more revenue in their pocket. So they actually have the time, the money, and the freedom to do the things they wanted to do, which is why they started the business in the first place.
Now, a lot of people are going to say, those who know do it and those who don't teach it. But interestingly, you have been a businessman and a professional all your life, and you're an equity partner in the Metropole group of companies. So you actually do get down and dirty as well. You're not a theorist.
No. I'm happy to walk the walk as well. As I said, I was meeting with a new prospect today, and somebody who's a medical specialist, in fact, and I was able to say to him, okay, this is the issue that you will have. And he sort of looked at me and went, okay, this isn't your first rodeo. So no, been there, done it. Sure.
So if you're interested in having the same business coach I have, go to Business Accelerator Mastermind website. I'll actually leave a link in the show notes, so metropolemastermind.com.au. And why not see if Mark can help you? With the challenges in the market at the moment, it would be a real shame if you missed out on the opportunity of having the same team on your side that I have on mine. Now, one of my favorite quotes from Warren Buffett is, wealth is the transfer of money from the impatient to the patient. Really, it's, in my mind, the concept of the critical concept of delayed gratification.
Yeah, I mean, everybody wants it now, and it's those who are prepared to put in the effort, put in the hard yards, be clever, be smart, take advice, and be prepared to delay that gratification. Then that is who reaps the benefit ultimately, isn't it, Michael?
Well, in property, it has a lot to do with the power of compounding. So, your property goes up 10% and then it goes up 10%, not on the original purchase price, but on that higher price. And it's like the lily ponds, eventually keeps doubling much faster and faster. But it takes time. So interestingly, over a 15-year period, 50% of the growth of your property will occur in the last 5 years, the last third. That's just the way compounding works. So these periods in the property cycle, such as now, when you're actually going to go backwards, or if you stay stationary with your property values, you're doing well. But that's just part of the cycle. Now,
yeah, and it's part of having that long-term view that we spoke about earlier.
Sure. Another quote from Warren Buffett: it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Now, he's a value investor, but it's really the same in property, isn't it, Mark?
Well, you make your money when you buy your property, but not by buying a bargain. So it's about locking your profits, buying the right property, Michael. You often talk about the fact that there's markets within markets. People say, "Oh, Michael, what's the Brisbane market doing, or what's the Melbourne market doing?" But there is markets within markets, isn't there?
Sure. So you want the right property, not a cheap property, because sure, you could make a one-off profit by getting it $50,000 cheaper or whatever, but I'd rather have a property that outperforms the average long-term because of its location, because of its scarcity, because of its potential to add value. So listen to Warren Buffett and be a value investor. He said it's far better to buy a wonderful company at a fair price. He's not looking for a bargain, rather than a fair company at a wonderful price.
Well, I think those who invested in places like Moranbah and those sorts of areas have probably learnt that lesson very well.
Yes. Interestingly, it's been so long that there's a whole new generation of investors who got into the properties market over the last couple of years during booming times who are going to learn some lessons along the way. Now, interestingly, Warren Buffett made another quote that I said a few minutes ago,
yes,
and I know where I got that lesson from. And he said, I'm a far better investor because I'm a businessman, and a better businessman because I'm a investor.
Yeah, it's very. I mean, strategic property investors treat their investments like a business, don't they, Michael? And if that's the approach that you take, I think you can learn so much from the principles of business and the principles of property. And I guess that's why, if we can help our business clients to generate the revenue and drive that into the assets of property.
Yeah, well, I guess they're just some of the thoughts from, I guess he'd be the most quoted investor of all time. I could have easily made that list twice as long, as there's no shortage of advice ideas from the man himself. But I hope that you, the people who are listening to this, are going to use this motivation as just a way of thinking differently. And way back to what I said at the beginning of our chat, look carefully who's giving advice to you. I can pretty much promise that if you listen to the majority of people around you, you're not going to get where you really want to get to, because they haven't achieved what they want to achieve. So there's a lot of negativity at the moment. A lot of people with the glass half empty rather than the glass half full. So back to the first sentence, don't take advice from somebody who you wouldn't trade shoes with, Mark.
Yeah, great advice, Michael. Great advice. These chats are always good fun, aren't they?
My pleasure. Look forward to catching up with you on the podcast again. I mean, we speak 2 or 3 times a day, which is a different thing. But
that's right.
Interestingly, over the years, we think very similarly about things, which is lovely to have a friend like you. Thanks, mate.
You're welcome. Good to talk to you, mate.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
In today's mindset message, I'd like to share a lesson from one of my early mentors, the late Jim Rohn. And I quote him often because he made a huge difference on my life. And I hope by passing on some of his messages that influenced me, I can help you become more successful in all areas of your life. And currently we're having our share of challenges, aren't we? And I hope that today's message is going to help you get through some of these difficult times, because Jim Rohn taught me that if you can change yourself, you can change your life. He said life's about constant, predictable patterns of change, and the only constant factor will be our feelings and our attitudes towards life. Jim Rohn said, as human beings, we've got the power of attitude, and that attitude determines our choices, and the choices determine our results. Now, you've heard me say it before, your thoughts lead to your feelings lead to your actions, and your actions lead to your results. So clearly, the inside world, what's going on in your head, will determine what's happening in your outside world. Jim Rohn said it differently. And he said, all that we are and all that we can become has indeed been left to us to decide and to interpret through our attitude and choices. So he's also saying that, hey, we can determine our future. So where you are today is a result of all the decisions you've chosen to make and the decisions you've not chosen to make in the past. And that's led you to be where you are now. So let's have a think about how you're thinking now so you can be in a different spot moving forward. See, Jim Rohn said life is like the changing seasons, and you can't change the seasons, but you can change yourself. So the first major lesson Jim Rohn taught me was, in life you've got to learn how to handle the winters. And he said they come regularly, right after autumn. Some are long, some are short, some are difficult, some are easy, but they're always right after autumn, said Jim Rohn. And that's never going to change. And he also said there's all kinds of winters. The winters where you can't figure it out. The winter where everything goes wrong. There are economic winters, social winters, personal winters. And at the moment, I know a lot of people have got a whole lot of those all together, haven't we? Wintertime can bring disappointments, and disappointments are common to all of us. So Jim Rohn said you must learn how to handle the winters. You must learn how to handle difficulty, because it always comes after opportunity, and that's never going to change. So the big question is, what do you do about winters? Because you can't just pull those months out of the calendar, simply tear them out, and you're not going to have June, July, August. You're not going to change the outside world, are you? But here is what you can do. You can get stronger. You can get wiser. You can get better. Remember that trio of words: stronger, wiser, better. The winters won't change, but you can. Now, before I understood this, I used to wish for summer when it was winter. When things were difficult, I wished they were easy. I didn't know any better. But then when my mentor Jim Rohn gave me the answer, I changed, because he said, don't wish it were easier, wish you were better. Don't wish for fewer problems, wish for more skills. Don't wish for less challenges, wish for more wisdom. So there's my message to you today. Now, you've possibly heard me say this before, because I have mentioned this in previous podcasts, but I thought the current winter many of us are going through at the moment is a great time to remind yourself that if you change yourself, you can change your life. Well, I hope you got some benefit from my chat today. Now, if you did, and you know somebody else who'd also benefit, do them a favour. Tell them about the Michael Yardney podcast. All podcast apps have a share button. On Apple Podcast, there's 3 little buttons at the bottom. You just press them and you'll get the share button. Or tell the world by leaving a review. Now, I've got a way of saying thank you for listening to my podcast. Go to podcastbonus.com.au and you can pick up a heap of reports and ebooks to help you become a better property investor. I'll be back again real soon, but you can follow me on social media. Just look for Michael Yardney, or why not join my private Facebook group where every day I leave some little tidbit I don't leave elsewhere. Go to Facebook and look for the Property Update Facebook group. I'll be back again real soon. In the meantime, have a great week. Make it a great week.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael, but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?